Hey everybody, your friendly neighborhood stoner man here from Unusual Whales. This video is from the live Twitch stream recorded on January 12th with Unusual Whales' one and only Snorlax UW going over the basic navigation of the flow and where to find stuff on the site. So go ahead, strap in, grab yourself a floaty, and let's ride the flow.
Alright, so we'll get started here. So what you're seeing here is obviously the flow feed. You can access by clicking on the flow at the top here. You can access it on your phone. You can also access it on your mobile app. It'll look different on whatever medium that you're using it on. So just be mindful of that. We recommend using it on the computer. There's just way more functionality. It's just way easier to use.
I'm looking at this game like I don't know what's going to happen. And I know it's an arrowhead, and I know that's...
Okay, sorry about that.
1-0 in this game.
So yeah, use the website on the computer. And before we actually get started, let me plug this excellent report on insider trading. Check it out if you haven't seen it. And let's just get right to it. So you're looking at the flow feed. Every options trade placed on the market, you'll find here. You will find your own trades here as well. If you want to do that, it's always fun to like look back and see. So while we're on the subject of looking back at your own trades, you might say, hey, like I bought this call, but it's showing up as me selling it. So that brings me to, I guess, the first thing that we'll talk about, and I'm already jumping around. So before I jump around everywhere, let's just not jump around. So we have the navigation menu right here, and from here there's all these different tools that you can use. So we'll just focus on the main areas for someone just starting out. So we're on the flow feed right now. That's this top part right here, all the options trades, like I said. The next part is the news feed, which is quite helpful. So actually we'll just click into it and show you guys what it looks like. So yeah, live news feed, like I said, preset news filters right here, and then you can even go in and set your own custom filters. So let's see here. If we want to look at like an insider sell, you can turn that on, and we have all these CEOs, CFOs, CIOs, all that stuff here doing whatever they're doing. So the news is helpful. Again, you can access this on your phone. Yeah. So moving on, flow alerts. This is something in beta, so a lot of the stuff here is in work. I guess I could say basically all of it is in work. So bear with us if something is out of place, something doesn't look right. Report bugs if you guys have them to support@unusualwhales.com. You can also come to the Discord server if you guys have some issues as well. So flow alerts, like I said, a feature in beta. You can read about it here. This is not something that I would recommend like someone just starting out. So we'll just kind of gloss over that, and we'll just gloss over everything and before we dive into it. So here we have the dark flow, the dark pool feed. This is, you can use this if you want. We'll just take a look at the feed right now while we're here, and you can filter it to your liking. Yep. All right, so moving on in the navigation, we have the intraday.
Important to note about dark flow quick, just because we do get this question quite a bit.
Yeah.
There used to be an indicator of buy sell. Those are gone now because there's no surefire way to know exactly whether a dark pool transaction was a buy or a sell. And so that's why those aren't there anymore, and that's why we don't propagate it.
Yep. So while we're here real quick, so you might see that trades are coming in, and maybe trades won't come in after you set some kind of filter. There is a threshold of premium value that a trade needs to meet. For the dark pool, I believe it's 3 million or some percentage of the total market cap that will automatically come in, or okay, maybe not 3 million, 300,000 is what it is. You could refresh it anytime, and you will see trades that you did not previously see. So we just saw a few extra trades here. So you can refresh at any time, perform a search at any time to see everything. However, if you just leave the page stagnant, then only trades that meet a certain threshold will come through. So like I said, on the dark pool, it'll be 300,000. And then on the options flow, it will be 200,000. Okay, so moving on, we have the intraday analyst page. We'll go over all that later. So the rest of these are just tools. Okay, so we'll just focus on the flow feed, and then, like I said, we'll dive into the rest of it later. So we have the full feed here. Now that we're done talking about the navigation, we'll click over here to the filters. You have your filtering menu right here. We're gonna consolidate it into a kind of basic and advanced filters for ease of use coming up in the near future. Table settings right here, you can toggle on different types of information, or toggle off. So if I don't want to see that, I can turn that off. If I don't want to see the days till expiration, I can turn that off, etc., etc. Some of the values are on by default, and yeah, so you can just do whatever you want here. At the very bottom, there's a save trades feature. So if I turn that off, I can turn that on right now, and then I'll have these heart icons right here. So I'll just click one here, and this quote unquote saves the trade, which if I click here, I can view to see it. And within your own saved trades, you can perform filtering as well. So if I had, so right here I have a QQQ trade. Let's say I had a SPY trade right here, and then another SPY trade right here. I could type in my filters SPY, and then I would see, those two SPY trades that I just made up right there. So the saved trades is also fully filterable. Yeah, so moving on, flow info right here. Just some information on the feed, a legend, explanations. So a common one that we get asked is, what does it mean when a trade is struck out in the flow? It'll have a red line right here. But when a trade is struck out, it means that it's been canceled or modified. And if you didn't know that was a thing, it's a thing. It sounds like bullshit, and there's probably some degree of nonsense, but essentially trades that have been struck out have been canceled or modified. Trades can be modified or nullified and this is all basically quoted from the SEC website. Trades can be modified or nullified for the maintenance of a fair and orderly market per the SEC, period. Exchanges can erroneously send more trades than were actually placed, especially during times of high volatility. So basically, this is just a normal occurrence. It happens all the time. You'll see sometimes the trade will be canceled, so you'll see the red line here, and then there won't be a similar looking trade hitting the tape later. If it's been modified, you'll see a slightly different trade, but like the same contract, and it'll be very similar. It'll just be a few contracts, typically just a few contracts short of what it was before. So like it says, just it's a computer error or something, whatever they want to say it is. Yeah. Okay, so let's talk about, before we go into the charts that you can access right here, we'll talk about these pillboxes right here. So this first one right here is just the market state. What's the date? Today's the 12th. This is the totality of all of the puts and calls that have been purchased, or not purchased, but transacted. And then here's the call volume compared to the put volume, call premium compared to the put premium. So call volume is simply the number of calls that have traded hands. Put volume is simply the number of puts that have traded hands. So neither one of these, so a high call volume is not necessarily a bullish indicator. A high put volume is not necessarily a bearish indicator. So similarly, the premium, we can apply the same logic to the premium. So a high call premium is not necessarily bullish, and then a high put premium is not necessarily bearish, because calls can be sold and bought, and the same with puts. So if I was to type in a ticker here, then I get information pertaining to the ticker that I typed in here, so for the totality of the trading day. So if you look at Apple today for the 12th of January, we have a put call ratio of 0.4. about 829,000 calls, 366,000 puts, and then there was 247 million in call premium compared to 85.5 million in put premium. So we get a final reading. So this is for the totality of the day. This will update during the day as well. So as it stands now with the market closed, the sum of all of the Apple options flow is about 61% bullish compared to 39% bearish. So the way that this is calculated is by gathering essentially the bullish sentiment options, which are the ask side calls and the bid side puts, and then the bearish premium will consider bid side calls, so sold calls, and purchased puts, ask side puts. Obviously, it's impossible to tell all the time if a position is being closed. So like if someone was buying to close their covered call, it would look like they were purchasing calls. So that would be factored in as something bullish, but like it's not really it doesn't have the same weight as someone like starting a new position purchasing their calls, you know what I mean? So that's what these pills mean. All right, so yeah, this pertains to the totality of the flow. If I changed it to Tesla, for example, it changes, different reading. And this quick view button right here, and this will only be available if you're on the super buffet. So if you click it right here, you get live data for whatever ticker you've entered. So this is all live data, and this data can all be found elsewhere on the site, but it's just been put here for your convenience. So top 5 chains by volume. So which contracts have the highest volume, and volume is not necessarily bullish or bearish for calls or puts, respectively. So the most highly transacted Tesla option today was the January 14th, the weekly $1,100 strike calls, and they closed at a bid ask of 2210 to 2300. And then here are some low-high contract stats of the day: volume, open interest, etc. So, like I said, all this information can be found in different places of the site, and we'll touch on one of those places soon that is a good place to hang out on the website. So going back to the feed, like I said, you can toggle the columns on with the table settings menu, and you can change your time settings in the settings menu right here. So mine's on Eastern. You can put yours on whatever you'd like. So like I said, toggle these on, and maybe we can just turn on I'm going to turn the save trades off because we've already talked about it, and we'll just toggle these on. So we're going to not turn on the Greeks, but you guys can use the Greeks obviously if you want. We'll turn off the sector as well, but we'll just talk about the feed right now. So obviously what time the trade came in. We'll just refresh the page right now real quick. So like I said, refreshing shows you everything. So I see someone buying a single contract right here. I see someone buying 10 contracts right here, etc., etc. I see someone buying 2 1250 lottos right here at the end of the day, literally at the last second, for $98. I wish you well. So yeah, here's the time. Here's the ticker. If you click on the ticker, you will be taken to a different area of the website. I'll just show you what it looks like. So I clicked on it right now. There's other information here. You can access this area by visiting the tickers menu, but let's not get too far ahead of ourselves. So here's the ticker. There's going to be occasionally symbols next to the ticker. You can hover over them for an explanation. You can also visit the flow info tab to see an explanation as well. So yeah, here's the ticker, and real quick, you can search multiple tickers as well. If you search multiple tickers, then your top area right here will still it'll still calculate the values, but like gauging bullishness or bearishness with like multiple tickers, multiple like total flows, like it's not really wise. I guess you're not really going to be getting like an accurate reading, so so maybe don't do that. But yeah, you can type in multiple tickers here. Alternatively, you can remove multiple tickers. So I'm going to remove all these indices that are able to trade after hours, and slowly you're going to see that I'm getting rid of them. I think there's a limit of 20 tickers in there, so so yeah, be cognizant of that. You can manipulate the emoji dropdown, which we will talk about in a bit, to eliminate maybe some tickers that you don't want to see, to save yourself from the limit. But yeah, we'll just pull back Tesla real quick. So like I said, we have the time right here, we'll have the ticker here, and some symbols on the side. Hover over them if you just need a quick info about them, or you can use the flow info tab for more information. Moving on, we have the side, which will say buy or sell, and this value is tied to a few other values, and we'll talk about that real quick. So I'm going to be jumping around here for the sake of explaining this, but just bear with me. So a trade will say buy or sell strictly based on the relationship between the spot, which is the price that the contract's traded hands for, and the bid ask at the very time the contracts were filled. Okay, so like I said, so it'll depend strictly on the relation between the bid ask and the spot. So things that are at or closer to the bid will be labeled a sell. Transactions that are at or closer to the ask will be labeled a buy. So it doesn't necessarily mean that they're bought or sold, which can cause some confusion. It just means that they were on quote-unquote the buy side or quote-unquote the sell side, which is kind of like it's like options lingo, like how you would explain your position to someone, which maybe doesn't make sense to someone maybe just starting, but yeah. So
I'm glad we're sprechen Sie the same lingity.
Yep. So sell, buy or sell, strictly depending on where the contract price lies between the bid and the ask. And while we're talking about the bid and the ask changes, and especially for like liquid tickers, it'll change many times in the same second, which is why, and I think I briefly mentioned this at the beginning, which is why if you buy something in the flow and then you go back to check it later, it might show up as a sell, strictly because the millisecond in which you got the fill, there was possibly a different bid ask than the one that existed when you like hit the button on your phone, like because there's delay and all that. So that's why there might be a perceived discrepancy in that case. So we have the contract details right here. So we have a Tesla 1000 put for February 18th. DTE is the days till expiration, so we have 37 days on this contract. Underlying, which is the Tesla share price at the time of this transaction. And the percent diff is how far away the strike is from the underlying. So a 1000 put is 9%, 9.6% away, but negative, so it's like 9.6% down. So if we were looking at like an out of the money call, so if we slide over real quick to this Tesla 1300 call, that's obviously out of the money, so we're looking at a 17.4% out of the money position. So that's percent diff. That causes some confusion, so hopefully that clears that up. Let me see if it's labeled here. Okay, it's not in there, but yeah. So moving on, bid ask. Like I said, the bid ask at the time of the transaction, the spot price, the price that the contract's traded for, size, the number of contracts, premium, the total amount spent, which is just spot times size, open interest, volume, implied volatility, trade codes, flags, and tags. And I just kind of jumped over those last few real quick, but we'll go into them a little bit more right now. So open interest, OI. Sorry about that, if you could hear that. So open interest is the number of contracts that were carried over into the next day. So it does not, this value will not change throughout the day. So if I was to specifically hone in on, we'll just look at Tesla 1,000 calls only, and let's see if we have any activity for this week. Okay, so I've looked up specifically. Okay, so we're specifically looking at this one contract, the weekly 1,000 calls. So as you can see here, maybe this isn't a great example because the volume is like, it's abbreviated into a K. So, okay, regardless, you see here that the volume value might be increasing. So as we scroll down, we're looking earlier into the day. So we're looking at 12:40 Eastern. There was 2.1K volume, open interest 4.5K. And now we go closer to the present. The volume is still increasing, but the open interest is staying static. So this will update tomorrow in the pre-market. You can see these updated values in several places on the site. One place on the site we will go over, it's in this feed. You can click this expiration to see it. We'll touch on that shortly. But while we're here, so open interest doesn't change throughout the day. The volume value is what will be changing. So just be cognizant of that. Look at, if you don't know what any of these values mean, please, if you click on this button right here, which I skipped over, there's a link to a nice doc page. Sorry about the light mode. This will break down a lot of information in the feed that I'm going over right now. And there's also a link to the glossary right here, which will go over a lot of information as well. And there's some missing spots here. It's still being put together. So moving on, the code, you can turn this off if you want. This is a code that is provided by the exchange, and it just describes the manner in which the trade was filled. You don't need to pay too much attention to this. There are maybe some instances in which you could get a little bit of extra information if you're trying to do some flow analysis, but that's a little bit too complicated to talk right now. Moving on. Flags, we have no flags here. Let's find some. And this time I'm pretty sure we can just go back to DT because I'm pretty sure that big trade today. Oh, no, it wasn't. Okay, so, but anyways, while we're here, flags. We have a bunch of flags. You're going to see a cross, a floor, or a sweep. And are these described? They're not described here. They're described on the doc page that I just linked with this help button. Alternatively, you can hover over here. There's going to be links to additional resources in the docs. So if this brief explanation is not good enough and you would like to know more, please visit the glossary page. Yeah, you can toggle. You can look for specifically crosses, sweeps, or floors with the filters. We'll go over the filters in a little bit here. Let's get back to something that's nice to look at. All right, so we'll talk about the emojis next. So each trade will have 2 emojis by default, and the emojis are one of those values that I said was tied into the relationship between other values. So like I said here earlier, the sell is related to simply the bid and the ask in relation to the spot. So if it's a sell, then it will be a bid. So if it's a sell, it'll always be a bid. If it's a buy, it'll always say ask. So those two are tied together. And the bullish or bearish is also tied to, if it's a sell, a bid side sell, like I said, so bid and sell, ask and buy. If it's a bid side put, it will be bullish because it's the assumption is someone is writing the put. If it's a ask side call, buy call, it will be bullish. If it's a bid side call, it will be bearish because the assumption here is that someone is selling this call to open. Again, we don't know what they're doing, but just the notion of a sold call is bullish or is bearish, excuse me. And then right down here, buy put is bearish. I think there's like a nice command in the Discord that explains it. I think it's quotation, or not quotation, it's a question mark how, HOW. I think that's the command. If you need that reference. So there will always be a bullish or bearish bid or ask side emoji by default, and you can toggle the bid and the ask right here. You might have some other emojis as well that give you a little bit of additional information. There's nothing, all the information in the additional emojis is just stuff pertaining to, so here we have a leap, which strictly pertains to how far the expiration date is. Up here was monthly. So there's nothing like secret about, or there's nothing really to need to know about these extra ones. They tell you exactly what they are, it's just face value. So if we go to the emojis legend, which you can access from the alerts tab, we'll just take a look at like the full listing. So ask side, bid side, we talked about. A Chinese ADR, so like, simply like Baba, Neo, XPEV. Let's see, weed like Tilray, MSauce, ACB, whatever. So like, I guess maybe index or meme status might be interesting. This emoji is strictly dependent on a ticker's social media mentions, so maybe that's something that gives you a little bit more information. But we have semiconductors. No secret sauce here, just strictly information. When does it expire? It expires today, it expires this week. But yeah, the main ones that you want to know are the ask side, the bid side, the bearish, and the bullish. Those are the main ones that you want to be able to identify. Yeah, so that covers the feed. So while we're in the feed, I've already mentioned some things that you may not have known. So we have the help button right here. We have some additional information here. The quick view button, like I mentioned, will update live throughout the day. Live information about the ticker that you've typed in. Remember, it'll only accept one ticker. Yeah, so then one other quick resource that you can access from inside the feed. So I talked about how you can click on the ticker to go to the ticker specific page. Just for a recap, this is what it looks like. You can access this information from the tickers menu here. And the other thing that you can do from inside the feed is click on the contract's expiration date, and this will pull up the historical open interest and volume for whatever ticker that you've clicked on. So if I click on this right now, it will show me information about the Apple 165 puts for this week. So if I click on it right now, I have the historical open interest and volume values, bid ask values, open and close underlying price values. This doesn't go back all the way. If you want to go back all the way, then you can access it from this this menu right here. So this is helpful if you're trying to track whales / big volume. This will update in the pre-market. Your brokerage might not update the value until exactly when the market opens, so you can hop on Unusual Whales and peep this value in the morning. That way you know before the market opens, hey, this, all this volume, it's stuck overnight. I can, I know that the whale is in or whatever. I know they didn't scalp it throughout the day. So check this out in the pre-market for some of your positions. It's really helpful.
A good example of that is the OPK whale that I tweeted out the other day. It had OPK as a ticker had gotten a lot of social media chatter based on some FDA stuff. They're in
Do you remember the
Biofarm. It was the $5 call for. That's the one actually that has those small sell orders. It's the $5 call for February 18th.
A lot better.
But yeah, 9,500 contracts came in on that $5 call, and then for me to verify whether that whale was still in, because I told folks I'd watch it, it appended directly to the open interest, and it hasn't left since. So I've been keeping my eye on that.
Yeah, so actually, let me just, since that is a really handy thing to look at, I'm just going to make a small detour and show you how you can access that. So like I said, click on the expiration date to pull up the values. Alternatively, you can click on the ticker, which is an extension of this menu right here that I mentioned. So if I click on the ticker, it'll take me directly to whatever ticker I've clicked on. So in this case, OPK. If I scroll all the way down to the bottom, I can see the whole options chain, and I can pick on the expiration date and the strike to look at the open interest. So what did you say it was? It was the February.
$5 call for February 18th.
Okay, so what day did it start coming in?
2 days ago, so the 10th.
10th. Yep. So we have the 10th right here. Volume, open interest. So at the start of the day on the 10th, there was 2,218 contracts that existed or that were carried over. And then throughout the day, there was a total of 12,138 contracts transacted. And then clearly a large sum of this. So if we subtract 13,334 from 2,218, it's, whatever, it's 11,000, whatever. So that means that 11,000 and the change of contracts were held overnight. So the open interest has ballooned, suggesting that, the whale or whoever was buying the contracts, they've held. And we can see yesterday there was significantly less volume, but then a lot of these people held overnight as well. So check it again tomorrow, and you can see if these 795 people also held. So like I said, you can access this menu by clicking on the ticker in the feed, or by clicking in this tickers menu right here. And then here's all the tickers. Let's search for OPK. We can click on it. This first initial page is the options chain for today. So you can see where the money was going today. So let's actually go back to that contract. So you said it was the 1218 fives, right? So
yes, sir.
So we can see clearly the most dollar on the most money on the chain, 23,000, but obviously significantly less than the other days. But this was still the most popular contract on the feed. You can see the bid ask breakdown. So this is kind of split right now. Again, you can perform a trade that looks bearish, but you're just closing the call. So it's not really the creating of a bearish position. So that is something that just keep in mind. Always keep that in mind. You never know what positions people are opening unless there's clear indication. Actually, we'll just talk about that real quick. It's one of the symbols. So let's go back to the symbols real quick here. The very first one is, it looks like a bag, and let's actually just find one so we can we'll go back to DT because I'm typing in the premium there since I know for sure. Okay, so let's go to today's only. So if we're looking at this one trade right here, we have this bag symbol. So if we look at the flow info tab, we see right here the trade was to open, buy to open, or sell to open, as determined by the relationship between the size, the open interest, and the volume. So given that this trader is transacting 4,300 contracts, but there was only 218 carried over into the night, and previous to this trader doing this trade, so the volume here is 5.2 thousand, including this 4,300. So prior to this 4,300 trade, there was 900-ish volume. So the totality of contracts that existed was 900 plus 218, so around 1,100 contracts existed, and then this person comes in for 4,300. So we know that they're creating a position. We don't know necessarily if they're buying these calls or selling them. We can infer based on this information that they're buying them because the spot price is closer to the ask price, but we don't know for sure. But this is it's a pretty safe assumption that they're opening these calls. So that is so we know for sure that the open interest on this will go up tomorrow. So if you wake up tomorrow in the pre-market, you just find this obnoxiously large DT trade. You click on the historical volume and open interest. It will say 2002 or 2022, January 13th. It'll be in the pre-market, so there won't be any volume, but the open interest will increase significantly. So it looks like it actually closed with 9,135. So after this big purchase right in the morning and right in the first 30 minutes of the market, there was another 4,000 plus. And let's actually make sure that they didn't sell out of that. I'm pretty sure they didn't. I did see people adding on there. The 65. Okay, yeah. So more people added on. So we're definitely going to see this open interest like spike to like I don't know 6, 7, 8,000 tomorrow. Destruct era. This DT trade was opened. We know for sure it was opened. So while we're talking about opening trades, we know for sure that it was opened. I might surmise that this trade right here, I'll just pick on this trade. I might surmise that this trade was also opened, but it doesn't have the symbol. And it doesn't have the symbol because simply the relationship between the size of the trade, the open interest, and the volume. So there's so much volume here that this person coming in for a quote-unquote measly 222 contracts, they could be buying to close this position or buying to open. We don't know. That's why there's none of that handy emoji logo thing. So in this case, we can see there's actually 2 confirmed opening positions. So we have this one that we talked about just now, this super large one, and it looks like this person probably, this very same trader probably came in for 500, 250, 250 more, just like back to back in the next 20 seconds. So the timestamps are important. Always check the timestamps. They tell you quite a bit. All of the information here, it's all important. None of it is not important. It's here. If it's not important, it wouldn't be on the screen, essentially. Trying to get rid of all the extra stuff that is not relevant. So like I said, we have this big trade right here that we know for sure is being opened, and we have this other one right here that we also know for sure is being opened, as indicated by the emoji. Again, this trader is coming in for 125 contracts. Previous to the trade, so 153 minus 125. So previous to the trade, there was about 28 contracts transacted with 57 open interest. So there just wasn't enough contracts existing for this person to be buying to close. They can only be opening this position. And actually the bid ask and the spot price is identical. So like this is probably, let me get clarification on it. It might be a bug. It might be just like sometimes the bid ask is just weird. Like I'm sure you guys have seen it in your own trading. What does SLAN mean in the code section? Let's check it out. So transaction was the execution of an electronic order which was stopped at a price and traded in a 2-sided auction mechanism that goes through an exposure period. So it sounds like in layman's, execution was the execution of an electronic order which was stopped at a price. So it could be like a limit order, I guess, is one way that could be filled.
That's how I interpret it.
And I'm not going to interpret a different way because I'm not going to speculate. So one way is a limit order. There could be other ways, but it sounds like that's just a limit order. Auto, I think if you just market order it, it's auto. I think if you just slap the ask, I think it comes out auto.
Yeah, it doesn't really expound beyond it was executed electronically.
Other ones are intermarket sweeps. Yeah, there's other ones like multi-leggers have their own. Let's actually turn on the multi-leggers while we're here. No big multi-leggers for DT, huh? So if you do the multi-leg, you're going to also get the multi-leg symbol. Oh, and actually, I forgot, I glossed over, I didn't even mention this actually. So if you click on the multi-leg symbol in a trade, you will get a pop-up which shows other possible trades that could be that could be like other legs. So we know, so like I said before regarding the code is attached to the trade. This is not a value that Unusual Whales is adding to the trade. This is it's baked in. It's just like a fingerprint. It's part of the trade. We know for sure what this is. So if it's like a multi-legger of any kind, we'll have this symbol. So we know that there's other trades involved. We just don't always know which one. So they don't tell us which multi-leg trades are attached to which. They just tell us that it is a multi-leg trade. So judging by like kind of what time they come in, we can infer that trades are connected. So in this case, we can click on it. It'll link other possible trades. There's a quick way to access the options profit calculator right here. Okay, so while we're here talking about the options profit calculator, so it is a very handy tool, but you have to make sure that you're using it correctly. So let me pull up a trade from today that is a great example of. There it is. Okay, so let's just isolate that trade. Okay, so here is a single, just monstrosity of a trade that took place today, and there's quite a few things here that we've talked about. So we have the bag icons, we have the multi-legger thing, floor trades, all that good stuff. So while we're here talking about the multi-legger, so I said you can pull it up to pull up possibly associated trades, and you can also use this to quickly reference the options profit calculator. So if you do that, I'll close these extra windows. So we do that, it'll automatically input all of the trades directly as they're seen in the feed. So it's going to plug in someone shorting 39 calls for March, someone shorting 29 calls for January, someone going long 26 calls for March, and someone going long 26 calls for January. However, the reality of what actually probably happened here is, and I'm going to filter this so that it's easier for you guys to understand what's happening. So we have 4 trades here. I'm going to eliminate half of them, and we'll just look at these. Is that today? Okay, nope, I'm going to eliminate the other 2. Okay, so if we look at half of the trade, we can see that half of the trade consists of someone selling 21 calls and buying 26 calls. So this looks like, if you just saw this at face value, you might say, okay, so they're shorting, they might be opening some kind of call credit spread. So if you're going to open a call credit spread, you would short the lower strike call and then buy the higher strike call. However, if you were closing a bullish call credit or a call debit spread, by closing the spread, it would look like this. So let's say this was inversed. So the opening of this trade was actually the inverse. So when they initially opened this trade, they were buying instead of selling this 21 strike call, and they were selling the 26 strike call against it. So they were opening a spread, but now that they're closing it, they already have the 21 call, so they're selling back the 21 call. They were short the 26 call by proxy of their credit or their debit spread. So now they're buying back their covered position. So this trade, it's a closing trade. They're closing out this position. We will likely see the open interest drop by 30,000 or more tomorrow. You can fact check that tomorrow. It might not change because of a third party. It gets complicated, but just check the open interest. It will likely drop. So this is like most likely a closing position. We can't confirm it, but like you have to be able to piece together what you're seeing in the feed. And there's other research that we can do, and let's actually do that right now while we're here. So I'm claiming that they're closing out this spread, and so before we move on, before we dive into that, let's go to here. So this is the trade in its totality. So like I said, they are closing out their January position. So it's the second and the fourth trade. So they're closing out their January position, and they are opening a March position. I think I'm getting some weird notifications here. Sorry. Okay, so I've eliminated the other half. This is the half that they are entering. So like I said, we have the opening trade indicators, so we know for sure, given that this position, this specific 31 strike call only had 177 calls of this kind existing prior to today, then someone comes in for 20,000. So we know clearly that this is an opening position. So this is them opening a bullish call spread at the same time as they are closing their also bullish call spread. So they're bullish, they are still bullish. Let's actually try to find when they opened the position. So like I said, in the contract here, we can click on historical volume and open interest. So we know that their footprint is a 30,000 contract footprint, and this historical volume and open interest in here is unfortunately too short. So we'll look in the other area. So we're looking for the we'll look at the 20. Okay, so we'll look for their position going long. Okay, so they opened at the same time. Let's find their long position. The 21 strike calls for January. So I'm going to click on forward here. 121 strike calls. Sorry, my memory is so bad. What was the contract? Okay, so yep, 121. The 21 strike calls. We're looking for a big fat 30,000 block. Or they could have legged in. Okay, so in this case, unfortunately, we don't actually see the big 30,000 block. Otherwise, we would just see like one day at least a minimum of 30,000. So maybe here they could have legged in for quite a bit. So we don't know that they. Okay, so they clearly didn't leg in all at once, I guess is the point that I'm trying to make. So this position was built up. So I guess I kind of look stupid there. But if it was in one go, you would have been able to see it. So real quick, back to the options profit calculator. So we have this massive trade here. And we use the multi-leg tool to shortcut into the options profit calculator. So it's plugging it in as it's reading it. So like I said, they're closing out half of these positions. So we have to, if we want to use the calculator properly, we have to work out what is being closed and what is actually being opened. And you're not always going to be able to tell. In this case, it's very easy for us to tell because of these big fat blocks that just make it easy. It's just like the easiest example of like just tracking this this kind of trade. But like in a high, like let's pull up, for example, if we pull up Tesla. Okay, so let's pull up this multi-leg trade here, for example. So this person is transacting a total of 4 contracts of calls and 4 contracts of puts. But there's so much open interest in volume that there's no way that we can tell if this is someone opening the call and opening the written put or buying to close and selling to close. So you don't know. You can use the calculator to see what it would look like if you wanted to long an 800 call and short an 800 put. However, if this trader was doing this to close it, then reading it off the calculator wouldn't give you the right reading. So like I said, the Ford trader is closing out half of their position and keeping the other half. They're closing out their January position. So let's look here and let's close out these 2 January calls. Well, okay, so before I close it, let's take a look at the chart and see what's going on here. If I wasn't to do anything. So it's showing me just like some really weird options profit profile that if you're longing a position, you wouldn't get anything remotely like this. So you might look at this trade right now and be like what's going on? Like I don't understand. So let's close out those positions that we said were being closed. So January, we'll close out this one and we'll close out this one. So now we're looking at it properly for what it is. We're looking at a call debit spread, which is just a straight up bullish position. All right, so that's more like it. So we see we want obviously the underlying to go up, and that's how we make money. Is just like a linear. Okay, so it's not linear. There's like a curve to it. But strike price or contracts price goes up when the when the underlying price goes up, and obviously there's time decay and all that shit. But yeah. So this is the proper way to look at this trade. You have to close out the unrelated bits. So yeah, let me look at the questions real quick. You have anything to add while we're there?
No, that was beautiful. I was actually going to interject a few times, but as soon as I unmuted myself to do so, you already branched into it.
Oh, yeah.
And one little comment about open interest to volume tracking. Like Snorlax said, when you have those ginormous orders of 20,000, 30,000 contracts, it's really easy to trace as long as let's say you're trying to track a trade over time and there's this massive 20,000 volume flow that came in, and so you're like, hey, I wanted to keep an eye on that. One thing to keep in mind that you may have mentioned, if I miss it, I'm sorry, is that it's not always going to be that black and white. You're not always going to see somebody exit any given play all at once. Who's to say that they're not scaling out over time, right? So it's definitely important to keep track of something. If you're looking at a trade pretty closely, or if you've taken it, it's important to watch that open interest and volume over several days, because it's possible that they release their open position over the course of time rather than all at once, like the big Ford ones we saw.
Yeah, no, that's a great point. You can't always tell. you can kind of tell the next day, judging by how the open interest changes.
Right. Yep.
Yeah. So it's not always black and white. So like this top trade right here, 1,000 contracts, which is the only volume of the day, ish. This is rounded, but there being 3.3 thousand open interest already, you don't know. So maybe tomorrow, if this goes up by 1,000, if it goes down by 1,000, if it stays the same, you'll be able to paint a clearer picture of what's happening. But unfortunately, you're not going to know until the next day. What is the meaning of selling to close and selling to close? Okay, so there's buying to open, buying to close. There's selling to open and selling to close. There's 4 ways to trade options. So I'll just quickly go over it. TLDR, there are 4 ways to trade options. You can buy a call, you can sell a call, you can buy a put, and you can sell a put. And with each of these, there is to open and to close. So actually, maybe this resource isn't what you asked. So let's see.
I think that might have been what they meant to ask, since they said the same thing twice.
Let's see. Buy to open or to close. Okay, so buy to open. Okay, so this might be great. I'm going to put this here. So what is buy to open? Buy to open is a term used by brokers to represent the establishment of a new long call or put position. If a new options investor wants to buy a call or put, that investor should buy to open. So if you are buying a position, if you are buying a call, you are buying to open it. When you are selling it, be it to take profit, to cut loss, whatever, whenever you're selling it, you are selling to close. So you bought to open, you're selling to close. Alternatively, if you sold to open, you can only buy to close it. If you buy to open it, you have to sell to close it. If you sell to open, you buy to close it, if that makes sense. And it's important to know, this is like a cornerstone thing of information that you need to know regarding options trading. Because you're going to hear people reference it all the time, like buy to open, buy to close, BTO, STO, STC, all that stuff.
And just real quick, an example of like what he said, selling to open, that would be, say, somebody with a bullish lean on a given ticker. They want to bet on the upside, but don't want to buy naked calls. A lot of times they'll balance that out with some of the spreads that Snorlax discussed earlier. And you can sell to open a contract. Like, let's say I'm speculating on a stock to move up. I could sell a put that I don't own, which is the sell to open that, sell on the bid side of a put that Snorlax mentioned earlier, which would be speculating on the stock to rise. Because if the stock rises, the value of that put will fall, and you collect on that premium. So that's an example of when somebody would quote-unquote sell to open.
Yep, so if you're selling a covered call, you are selling to open. When you buy the call back, you are buying to close. If you let it expire, then you're not doing anything. It just expires. But if you want to close it, if you want to close the call that you wrote or sold, wrote is another word for sold, for bid. There's just all this lingo. So you can write a put, you can buy a put, you can long a put, you can short a put, you can write a put. Yeah, there's just all this lingo. But just know the relationship between all of that. Yeah. I think as far as breaking down the feed and the site, I think we've kind of gone over. We can just tail this off with some questions here at the end.
Someone already hitting you with tickers again?
We're not going to talk over specific tickers, but okay. So real quick, Snow. I'm not going to look at it, but yeah, they were coming in pretty hard for the 330 strike calls for March. We'll check the open interest tomorrow to see if they are maintaining those positions overnight. Why would the premium call put and the BVB premiums chart be inverted? Okay, so Rushmore he's asking why the call premium and the put premiums aren't like. There's no relation between the bullish and the bearish. So like we said, a call is not necessarily bullish and a put is not necessarily bearish. So in this case, if we look at this Tesla call right here, so this is actually I should have probably mentioned this in the beginning. So this is a great way to to describe this. So we have an 830 strike call, and they are coming in for 1,000 call contracts. So regardless of if they're buying or selling, we're going to get 1,000 call volume. So this 1,000 is going into this 852,000 value. Since we're still talking about a call, this 27.7 million is going to go into the call premium value. And since this is a sold call, this 27.7 million will be factored in as a bearish position. Because again, it's a sold call. The face value of a sold call is that it's bearish. So 1,000 volume, call volume, premium is going into the premium value, but this is going to come up in the bearish counter. Talk events. Okay, so basically sell is to get out of the stock and buy is to get in, which is closed to open. Okay, so in your case, you're selling to get out and you're buying to get in. So let's talk about the buying part. So when you're buying these shares or whatever, so we'll just talk about shares. When you're buying the shares of this company, you are buying to open your position. I don't know if does that terminology apply to shares? I don't know if it does. It probably does apply to shares as well.
Yeah.
I don't know, because
like
maybe not,
selling
like
short.
Open interest. I don't know.
Well, open interest doesn't, but like the buying to open and selling to open can. That's what literal shorting is when they sell shares they don't actually have.
Okay, yeah, okay. So buy to open, sell to open. So I'm buying these shares. I'm buying to open this position, and then when I'm no longer in the position, when I'm selling it. So what was your verbiage that you said? So sell is to get out. So now I'm selling to close. Buy to open, sell to close. Let's just put that buy to open, sell to close. BT. If you're selling to open, now you must buy to close. You are always going to be starting a position by opening it, regardless of if you're shorting it or longing it. It will always be an opening position. Yep, so just check snow. If the open interest doesn't move, okay, so there's like three possibilities with the open interest. It can go up, it can go down, it can do something in between, essentially. So it doesn't always have to go up based on contracts changing hands. So someone could still long the contracts, but if there's like a third party involved, it gets kind of confusing. Let me see if I can link something that will explain it. All right, so I'm going to link a YouTube video that has an explanation.
Hey, hope you...
Sorry, you guys could probably hear that. I'm going to drop it in the chat now. Check the description of this video. It breaks down how the open interest was kind of weird. So you have to look at the 85 strike calls, or the 85 strike puts for January 21st. So I guess maybe while we're here, we'll just hit that real quick. And hopefully it is the 21 straight calls, or 21 straight puts. Okay, so what day? Okay, so yep, here's a great example. So on December 22nd, there was 3,800 of these contracts that existed, and there was 12,144 volume. So we can see the next day carried over. There was a significant amount of these that carried over. Then the next day there was another big block. So it actually looked like, and if you go back into the feed, on the 22nd they wrote all these puts. So they sold the puts, which translated into this open interest. And then the very next day, it looked like someone bought them back. So a big block of buys came in. So using that, I kind of figured, okay, so maybe they're closing out the position. So the open interest might go down by 10,000 or however big the block was. But it didn't. And there's an explanation as to why. So let me... you have to go back into the feed to check it. But here is an explanation. There's a third party involved now, so it's it might be kind of hard to wrap your mind around it, but it's probably easier to visualize with like a picture. So maybe I'll like draw something that breaks it down.
Freehand it.
Yeah. I think that is basically it. Unless anyone has a quick question that they want to drop in at the end.
That isn't
the
a
next
specific
time
ticker
we
or
will go over the rest. So I thought we would actually be able to go into more, but maybe I just talked too much. But we only managed to get over kind of like what was in the feed.
I think all of it was great. I think you kept most of your explanations pretty concise, actually. I think there's just so much.
Yeah.
So this is really perfect for these guys.
Information overload is it's a lot. But just ask questions. Come to the Discord. There's a couple channels. There's like a subscriber question channel. There's a free general use channel. They're both manned, not manned, but like there's a lot of people that like just pop in and answer questions if you guys have them.